Hey folks, for some reason I'm not seeing the chat area. I can't see what you folks are doing there, so I apologize. We'll get started here in just a minute. Welcome everyone to the Kendall Report. Remember to subscribe, like, and share these videos and hit that notification bell. So it's amazing what a wonderful thing it is to get a new computer in a new environment, but how painful it is another thing. I've got so many hours in trying to get this back in place, so I can't even see your chat tonight, so I don't know if there's any chat or not. I didn't change the setting, but here we are. So let's go ahead and get into tonight's video. There's a fair amount to talk about. One of the things that I will be going back through again is I believe that the yen is back in play again. It's in a position where it could start to challenge that 137 level. I'll go into that in more details here in just a few minutes. But yesterday was fairly lackluster. Last night's video, I talked about maybe stalling. This is what happened. S&P down 0.30, Nasdaq down 0.74, Russell up 0.34. And that configuration continues to be the way that I've been talking about, where it's actually showing that the Russell has a little more relative strength all of a sudden than the other two indices that I cover every night. So energy rebounded. So that was an interesting trade. I said last night I'd cover the XLE and I forgot. So I'll do my best to remember tonight. I wish you folks were on. I could see your chat. You could yell at me and make sure that happened. Let's talk a little bit about some things that happened yesterday. The home sales were expected to be down 3.4%. They came in up 0.7%. So that was a pretty big surprise. But in spite of that, we actually had a 14% drop year over year. So housing continues to be an issue, even though this particular month it wasn't. I think a lot of folks, I talked a little bit about the adjustable loans are coming back in play. Fixed was in play for a long time. So now everybody's going back to adjustable, trying to get at least be able to continue to stay in the market. So that's going to help housing a little bit, but even that is a little pricey. The fixed rates are jacked up, as you know. The other thing that happened yesterday was we had durable goods come out. It was up 0.7%. And we also saw somewhat of a reaction to that. But if you look back on today's action, we were in a live room. There was nothing going on. Very tight range. We traded down just below the 39 handle into high 38s and rebounded and finished that up again. We're back trading under 39 as I'm looking at this. We were positive a little bit ago. We had traded up to 39.17. We're now 20 handles lower from that number. I'll go through the details and the technicals here in a few minutes. But as we come into Tuesday, we have a number of things coming out. We've got the consumer confidence coming out, expected to be 101. The prior was 106. So we'll see that's expected to come in a little higher. A lot of folks seem to think that the consumer is still very strong. I'm not sure that's the case. I think if you look at what's going on with the credit card expansion and credit expansion on the consumer credit, that's telling you there's possibly something else going on. Folks are even financing their gas prices, their gas or food or both. And it's getting a little tight out there, I think, from that standpoint. The other thing that's coming out, trade deficits coming out, not a big deal. Expect to be around 105. It was 105 last month. I think that number is going to be around that, maybe even a little bit more. FHA home price expected to show a 1.5 increase and a year over year 19. Been talking about housing prices for a while. I don't see the downside in housing prices right now, even though we've seen copper and lumber, a lot of commodities back up. You look at where lumber is, it's still relative to, if you go back 3 years ago, it's still a lot higher. It's certainly off its highs, but it's certainly almost not quite double from where it was, but pretty darn close to it. We're also looking at Case-Shiller coming out, which is the Case-Shiller real estate index expected up 1.8 year over year 21. And then we have the Richmond manufacturing, not a big deal. That was -9. They're expecting a positive number this month, for last month. So we'll see how that all plays out. I don't think anyone's going to be watching that. I think the real story will be if I'll talk about the yen here in just a minute, but the real story is actually that the big day is not going to be Tuesday, but Wednesday. Guess who's talking again? Jay Powell's out there talking, Pinocchio Powell, and he's going to also be talking after the release of GDP. I talked about GDP coming out. I think that's our big number this week, is that plus Powell's talking. I think that's not by accident that he's out talking. I think he's going to have to defend this number. I talked about this earlier, that I think that number may be revised downward. It was 115 is where it was. That's probably going to be about where we could come in a little worse than that. And depending on how bad, that may be Powell trying to defend that number. The other thing that's going to happen, we're just about to finish on Thursday, this second quarter, that he also already knows the preliminary numbers that are out there. He knows how weak the economy is starting to set up and with everything that's going on. And let's face it, I talked about this last night. There's not any changes going on right now at the gas stations. And those numbers are very consistent. Nothing's going on there at all. We're just seeing more of the same, and the prices aren't moving around. And just like I said, if you look at lumber prices on a retail level, nothing's changed there as well. Let me look at my notes, make sure I got everything I need to cover. Yeah, we did see yields move back up. I'll cover those in detail as well. Talk a little bit about the yield curve. And yesterday, like I said, was pretty, I would call it lackluster. It just traded in a range, a little downward pressure. And I'll go through the technicals here in a minute. But let's go ahead and take a look at the Wavetech database. So we moved up just a little bit here, up to 40.78. We had 1,040 buy signals, 73 sells. So we're moving up toward that magical 42%. And I talked about this just the other night, where looked like we're going to consolidate here. While we're consolidating, we could get some traction there and start to maybe get us into a sustainable uptrend. I'll go through the details on the technicals that I see setting up right now. But overall, we have a slightly bullish tone setting up as far as the short term goes. There is somewhat of a bottoming pattern going in, and there's certainly looking like there's more to the upside there. Just want to mention that as far as the database goes, as far as this 42% number goes, if we do get there, then that could set up a more sustainable rally and maybe pushes up well into maybe above 39, maybe into the 40 handle. We'll see what happens here. Let's go ahead and take a look at the technicals. So I did my best to make the numbers a little bigger here on the market grid. Last night, there was some talk about that not being the case. I wish I could see your comments right now. Unfortunately, I cannot. But let's take a look at the grid for today. I actually think there's some potential downside here. We've gotten a little rejection. We're back under 39 handle right now. With, like I said, 39.17 was the high. That's right at the R1 right now is 39.24. So we traded basically R1. S1 is 82. S2 would be at 38.59. And there's some possibility setting up here that we could go back and test the 38 handle and at least get down to S3. You can see STX 38.15. Don't think that's going to happen today. Maybe that'll happen on Wednesday, but it does look like there's some downside. And we saw this. It's an interesting pattern that's set up here on this. You can see where my cursor is, and the 21 and 40 period moving averages are right in this pattern. They're 39.37, 39.80. We could spike up into that range, but it still looks like they want to be rejected here just on a very short-term basis, maybe another day or two. That I want you to notice the PPMs here, though. PPM2 is down at 0.19. PPM1 is up plus 0.38, so that's positive trend mode, but that number is quite a bit below the market. We're also seeing the 10-period moving average 37.92. So we could get up. I've got a range kind of targeted here for a 38.04 to 39.40. And that looks like kind of a range that we're going to stay in at least for a day or two. We should see this pull back into this lower end of the 38 handle, I think. We'll see how this thing sets up. The key numbers, if we get a spike up, there's still a chance if we get up into this 39.37, 39.80 level that we would see a rejection even from that level. Right now, the PPMs are very mixed. PPM 1 and 3 are positive. PPM 2 is still hesitant here. But what that usually sets up is that we're going to stay within this range for the next couple days. We're probably not going to get into a breakout mode. I would like to see market grid turn up. I'd like to see a number of things in this pattern before we're going to get excited about potentially going up to these Fibonacci patterns that I'll bring up here. Let me just move this down so you can see exactly where they are. I talked a little bit about this last night. High target 1, 40.33. This is a 40 handle that I was mentioning just a minute ago. We're looking at the 41.84 level as far as the next level, and the extreme is 42.77. Now, I don't think we see that. Maybe we start off this Q3 with a little more of a rebound. But I think the next couple of days as we finish off this quarter, there's going to be some hesitance. And I think we'll see this consolidation here for at least a couple sessions as we go forward here. I sure hope you guys can comment here. I feel it's amazing. I normally don't pay attention to them, but I do see them, and it helps the stream a lot. So flying blind here tonight, but that's okay. Let's go ahead and take a look at the Nasdaq. Nasdaq, very similar configuration as usual. The S&P and the Nasdaq futures always seem to have a very similar type of configuration, but we're a little bit potentially stronger on the Nasdaq. There's Fibonacci numbers above this as well, but we need to get above this 21 and 40, and we're stalling right in there. Yesterday, the high on the Nasdaq was 12,262. The 40-period moving average 12,237. So we traded right into that. Bit of a rejection off of that. Went out at 12,040. So decent little reaction from that. And we're going to need to get above that number, which today, moving this over, today is going to be 12,216. So that would take out yesterday. We'd really have to take out yesterday's high, but the PPMs are telling the same story here. But I do think that we could see a bit more of a rejection come down. So far, the low has been 12,009. S1, 11,958. And S2, 11,867. So look for R1, S2. We basically not quite printed the R1 number yet like we did in the S&P, but it looks to me that we're going to see a little bit of backfilling here. It's a little early in the overnight session to make this determination, but watch this level. So as always, when you see these market grid numbers, know that they are more of a pivot number. So if you take out R1, then you got to look to R2 and up the scale here. So make sure you write these numbers down. Those of you that have the indicators have them on every market, not just on the ones I cover. Let's take a look and go to the Russel here. looking at the RTY, we're also stalling right around. It's a similar type configuration. Yesterday, we did see the Russel cash up 0.34 with the other indexes down. But what we're looking at here on the configuration is the same scenario. 21, 1790, 1798. They're clustered right there together. 1770 last trade, basically flat on the evening. Same configuration on the PPMs, with the exception that PPM 3 is a bit stronger, and that's telling us that the likelihood of the 40 to be penetrated is raising. Otherwise, the probabilities are high that we're going to get over the 12,168. So then we go to the Fibonacci numbers that are out there. Minimum target. Let me make sure you can see this on the grid here. So minimum target here is 1833, fib target 2, 1906, and fib target 3, 1951. So there is some upside potential on all of these markets right now, and we're really not seeing any real downside risk. The downside risk appears to be muted at some level. So I would expect to see, like I said, maybe tomorrow, maybe a little bit before the GDP comes out and Powell's talking again, then we are likely to see some consolidation in the indexes here. I don't think we'll get the breakout ahead of time, but it's certainly possible. And all of the factors I'm looking at, the PPMs that I looked at here on the S&P, on the Nasdaq, and on the Russell, all look very similar. They're bullish configurations. They're not bearish. Downside is limited here. And like I said, if we come back into the lower end of these bounds, especially S&P 3,800 here, we would be looking at around 1750, 1723. Not a lot of downside here, I don't think. And we should see this configuration continue to set up as we go forward. Okay, so let's take a look at the treasuries. And we traded up. We bounced right off of that 21 period average I talked about. This is the daily treasuries. That number was, let me get this grid set up. That number was at 30. Sorry, I got to move this up. Okay, that number was at 3.07. The low is 3.057, so really just a tick below that range. And then the next thing to look at is the 10, which is 3.26. And I talked about kind of the 3% being the absolute downside. 305 to 326 is the range to be expected. And the PPMs are trying to rebound, and this is the setup. I'm going to cover the yen here in just a minute, but this is the setup for the, I guess, the potential of a move higher in yields again. I think it's going to stall. Let's take a look at the weekly, because that's really the story that's being told. This is the dominant trend on the intermediate right now. And really, we've got the downside risk here at the, I talked about this last night, 2.28, and I rounded off to 3%. And on a low basis, this was last week, was that we came right into that number. We're looking at this week now, and what we're looking at is Lowsman 3.15, and we're looking at S1 3.06 on the downside, and 2.98, which was the 10-period moving average last week. So 3.01 is that 10-period moving average, and the PPMs are up at 0.96, 2.34, and 2.07. That's PPM 1, 2, and 3. And what that means is that angle of attack is still very positive, and there's still a chance for higher yields in this particular sequence yet. And what's likely to happen, though, is looking at the market grid, somewhere up around that 3.26, as high as 3.33 would be the peak for this week. I don't think we get up to 3.4. The spike that we saw 2 weeks ago, we got up to 3.48. So that's going, I think that high will maintain itself here for a little bit. Let's take a quick look at the yield curve. Yield curve flattened, nothing material here at all. It's really just kind of a flattening type configuration here. So let's go and let's take a look at the yen here. And I've got a couple of yen charts here. It's actually backed off just a little bit. This is the daily. We're right at 135. We're likely to see some interesting things here. I'm going to add our indicators in here. Let me get rid of the vol. Let's go ahead and put in the indicators and from the Wavetech indicators. We'll put in ppm 1, 2, and 3. And then I'm also going to go to my scripts and just put my 4 moving average, 10, 21, 40, and the 200. So you can see we're right on that 10 period moving average. ppm 1 is actually negative at the moment, 0.18. So there is some negativity, but the support is really at this, right at this 133.7 level. This is building a flag. I'll show you something here on the weekly in a minute. And this is where the bullishness comes in. The daily is consolidating and neutral. Let's bring up the weekly configuration. Now you can see we've got some, still got some nice acceleration. ppm 1 is at 0.51, ppm 2 0.76. And what this is telling us, that angle of attack that I'm always ranting about over and over and over again, because it is the crux of the analysis that I do. But this angle of attack right now is at 131, and that's rising about 1.5 points per week. So that's going to be your extreme. But the pattern that's setting up here is typical, where we get a little sideways movement, and then we've got a shot at some pretty substantial move to the upside. And I've marked this number here at 137. That is the key pivot number in this pattern. And we go to monthly, you can see this is just vertical, just a collapse in the Japanese yen. This is dollar yen. So you can see exactly what's going on here with their currency, and the momentum is just off the map. So we could see a high level consolidation before it goes higher, but this is one of the key areas that I want you to pay attention to, because if we get over 137, there's targets at 142 and again at 145, 147. Those are pretty insane numbers. I think if you convert to the yen, if you go yen the other way, that puts us at 71 plus a minus on the yen from that standpoint. So these are big numbers, and I still believe what I've been telling you for the last several weeks in this situation is that they're going to do everything they can to defend everything. They now own approximately half of all the JGBs. I believe the 10-year, the government now owns half of that. I was corrected that it's not the BOJ. It's the, I forget, Ministry of Finance. They have another entity, sort of like the Treasury, right? And that is exactly who owns all of the bonds. And so they own half of them. You know, we saw this type of defense going back a while back, where they were buying all the equity ETFs. They've had to support this market every way possible. And so this is a potential disaster. If we get to 137, are they going to buy all the bonds? Are they just going to print more money? What's the end consequence of this? And this is reason why I keep bringing this up. The potential consequences are they're going to have to sell more treasuries, raise money, and that's going to push our rates. There's going to be an international, or we'll call it a global effect if this gets out of hand. Right now, it's where it is. It's right at the 135. I think 136.5 was the high. 136.71 was the high so far in this rally. So watch this level really close. Watch the action here. If you start to see rates really start to increase, take a look at the yen, dollar yen, see where it's at. I think you'll be surprised to see that this is what is going on. It's not really, it was talked about around the street a little bit, but it's kind of, that story has kind of moved back to page 20. And all of a sudden, you know, we're still looking at the inflation and the housing and other things are in front of this. But I think in the backdrop, this is something to really pay attention to. Okay, next market we'll cover here is crude oil, 110.74 last. This is the weekly chart we have up there. And I'll try to blow this up so you can see it just a little better. See if I can pull this off. So what I want to show you here is that rising 10 right through the pattern. So this is a weekly rising 10. We've got a PPM value at 1.26, 1.28, and 1.4. So that angle of attack that I talk about all the time is very substantial, and that is going to drive. So 109.23 is the number to watch. This is weekly, so it won't change much. A little value, just uptick or downtick based on where the market is trading around this. But this angle of attack is not going to change for a while. A number of 1.27 is substantial and does suggest that there's roughly about, we're going to call it about a 20% probability to close below this level. You notice last week, we actually traded down to 101. We closed at 107.62. 107.87 was the number. It did close under that. We saw a little bit of follow through in yesterday's market, but now we're seeing in today's market, but we're seeing this thing move back up above that 10-period moving average, and that's going to act as a magnet. Now, I want to show you a previous segment here where we're going above and below it. We saw the same thing in Tesla. This is a really common pattern for me to watch for. So when we see market grid and you got a rising 10 in there, that's typically a bullish trend, and it suggests that that trend is going to continue to climb right along this. So even though we trade below it, you can see virtually we close very close to it. There's only one close where I have my cursor right now where there was any type of close under that. We had one of those last week. And if you look back at the momentum that was there, and the PPMs at that time were a little, let me just see what they were there just real quick. Yeah, they were quite a bit higher than where they are right now, but we're seeing some crossovers. It's still this is a good, what I call maintenance type configuration here. So we're likely to see this continue to just hover over this. Take a real quick look at the short term, which should be interesting there, as we're seeing the configuration here, and we have some Fibonacci targets. So we're looking right now at the 110.89 is the 10-period moving average. That's set up. The PPM is negative, but we're trying to cross to its first derivative. We're looking I talk about also about in a market grid, this is a bubble bottom. Typically we'll run up. We have some valid Fibonacci numbers right above there. Let me fix this graph so you can see what those numbers are. Those numbers are 118.38, 125, and 129. We'll just use the round numbers. So we can get crossovers. This is off of the daily configuration. We should start, what that's really saying is we're going to re-challenge these highs in here, which are right now are roughly, let me just get that number up for you. That's right at that 120 level. So basically it's telling us we're going to possibly make a new high, and most likely we'll re-challenge those numbers. And the PPMs are kind of mixed here on a daily, but it's really the weekly configuration that's driving this. A lot of times I'm going to talk specifically about some of these technical patterns, and when I do, I'll mention that the intermediate chart is the primary trend of demand right now, and that's the case that we have right now. I'll just flop that back up while I'm discussing this. Is this weekly chart is in a clear uptrend, the angle of attack, everything's in place. And what you see when you go from in a multivariate view, when you're looking at a longer term chart like this, you're seeing the primary trend. The daily chart right now, PPMs are mixed. We're holding into support, but there's really not any momentum. So you'll get, if we can get those numbers I talked about in the dailies here, what we'll see is then everything starts to accelerate again, and we'll move in, retest those highs at 120 plus, maybe 124.25 on the upside. But this primary trend is what's driving this market right now. So there's still an uptrend. So I promised you I would go to the XLE tonight. I'm going to do that. And I'm going to go full screen, and I'll blow this up. So we get a little better view of this. So what happened, this is the weekly, and we broke down sharply here. We cut through everything. We lost a lot of momentum. We actually have a negative momentum on PPM1 at a minus 0.31, a plus 2.9 and plus 0.84 on PPM3. So what this suggests is that we should stay above the 68.50 handle and probably below 77.30. We're coming up at the upper end of that. Could trade up to the market grid, maybe even up to the 10 at 80. But this is going to be a consolidation pattern that's likely to happen. You see all the PPMs have broken through, first, second derivative, everything has already occurred there. So that is likely to just be the setup here, and we're going to get some more consolidation. I draw that in. I'm still working on getting a new drawing tool, and but right now we're just looking at this configuration, maybe this getting turning up a little bit. We still have most of our money in cash on the XLE hack that I did in our live room that I've shown you folks from time to time. On to gold weekly. Gold is just continuing to be somewhat lackluster. As I mentioned last week, we had a cycle low, 1817. We've been down to 22 so far. We're holding that low. I'd be a little concerned if we take out that potential for a cycle low there at 17. And like I said, we've been down to, I get to the current, we've been down to 21. So far we've held that. We really need to be above 1850 to keep this market in any kind of favor. I still think whatever's going on with this is, I think it not only is it getting beat down every time there's a rally, but it's also being supported very well. And I talked about last night the potential with this Russian situation, with the Russian gold, what that's going to mean. I'm not sure. So far, everything that the West has done against Russia has pretty much been the opposite. You know, the ruble's still moving higher, and you know, on a relative basis from where it was. And gold, we'll see what happens here, if that's a disruption of supply or some new supply to the markets. I'm unsure. I've been trying to come up with some kind of scenario around that. For right now, it's just being supported, and there's lots of resistance, 1850 all the way up to 1900. It's massive. So final market I'll cover tonight is the Bitcoin, and we continue to hover just below the 200 week moving average. This is the weekly chart. PPMs are very negative, minus 6.22. This is a massive downtrend, and probably not this week, but next week. I'm going to blow this up so you can see it a little bit. There's some big issues coming here in Bitcoin. See if I can grab this whole area right here. What's happening, where you can see this declining 10-period moving average. Well, this is going to fall into the market grid maybe next week, if for sure the week after, and that's going to set up a very negative pattern as far as Bitcoin goes, and it's going to continue to suggest there's some lower numbers in play. Let's flip it over to the daily, because there are some fib targets on the downside that are possible in this pattern. I talked about this, I believe, last night, that we're at 20,611. We're trading just below the 10-period moving average. We were above it last night, but we're already starting to see the PPM starting to accelerate, minus 0.77, 1.92. So there's some pressure for this market to move higher. The only positive thing that's happening is that the PPM 3 is starting to break out. And a lot of times with these PPMs, you'll see the 3 actually go first. So this is encouraging. And I also talked about the cycle low that we had coming in. So far, it's holding. That low was at the 20,768. So we're just hanging right around that. But the pattern is suggesting, just based on the PPMs and the magnitude that they're declining, that we're still got a ways to go before we get a bottom in this market. Okay, folks, this will do it for tonight. I really am sorry that I can't see the chat. It's very helpful. I never realized how much I miss it until it's not there. So I'll try to figure out what happened, why it didn't launch. It always launches when I start this platform, and for some reason it didn't. So anyway, folks, thanks again for watching. Make sure you hit the subscribe button, the notification bell. We actually finally made it over 32,000 subscribers. I guess now our mark's 50,000. So tell your friends, get subscribed, and just for the heck of it, hit the like button. It's free. That's a great way. We've been under 1,000 likes the last several nights. So join in, hit that like button, and I will see you tomorrow night, same time, same station. Talk to you soon. Hey folks, I wish I'd have thought of this. I started YouTube and I can now see all your comments. I don't know why it didn't come on my platform. Sorry about that. Looks like some great comments tonight.